am honestly over here scratching my head, trying to figure out how people keep spending money like they are. I fully understand the pressure that my peers are under to keep up appearances and spend like they aren't stressed, when in reality they are very, very stressed. I just don't understand the lengths that they must be going to in order to keep up. Like, are they selling plasma once a week, or what is going on? Let's talk about how, as a society, we would rather swipe our way through this than cut back on literally anything. In fact, credit card delinquencies are now at their worst level in recorded history. Almost 3.5% of Americans' balances on those things are past 30 days due, which is having an impact on credit scores. They haven't been this bad since 2020. I'm not done. We can really tell what's going on with Americans by looking at what they're doing with credit cards. The share of accounts making only the minimum payment, just scraping by, is up 34 basis points. Credit cards have to be maxed out by now, which is why I don't understand how the inflation readings keep coming in so hot. The price of goods is supported by demand. People are finding the money somewhere to keep buying everything. So producers don't have to cut their prices and inflation remains stubborn. Now, you're likely aware that inflation readings came in this week, hence the thumbnail on this video, which is an accurate depiction of loan officers everywhere on Wednesday, when the Consumer Price Index, CPI, for March rose 3.5% from this time last year and was up 3.2% from February. The big rock in the way here is the cost of shelter. That is a direct quote from every renter, buyer, realtor, and lender. And Mark Zandi, the chief economist at Moody's Analytics. That's us, guys. Real estate. Housing costs are the largest share of the CPI inflation index. Rent and owner's equivalent rent were up 0.4%. Interest rates are higher. Home prices are even higher. The cost of avoiding homeless is relentless at this point. While I'm not an expert on getting a good deal as a renter, though I could offer some advice as a landlord, so let me know in the comments if you'd be interested in a post on that, I am an expert on buying a home. And I have always believed it is your built-in protection plan against inflation. This is likely not the only time in our lives where we will be at war with this enemy. When I was born in the late 80s, we just ended a war on inflation, where it had hit 14% at its peak. For reference, during the current inflationary period, the highest reading was at 8.5%. The great inflation period that ended in the 80s was long, too. It had started in 1965. Inflation was then pretty chill until about 2007 when it hit 4%. That was the bank crisis, which led directly into the housing crisis, which resulted in a financial crisis. Inflation wasn't sticky that time, though. It really didn't rear its ugly head again until our current predicament. The reason for this whole history lesson is that I'm halfway through life and have experienced 2 inflationary periods already. You know something that I'm really, really grateful for right now? A fixed housing expense. We bought our house in 2012 and our mortgage payment is like $2,200. That's an amazing feeling. And I'm not trying to rub it in anyone's face because I understand that you're looking at a much higher mortgage payment right now. What I'm saying is that just knowing exactly what it will cost you to shelter your family for at least the next 30 years, regardless of what happens with the economy or elections or anything, internationally or nationally, that feeling of just knowing what you're going to spend to avoid homelessness is priceless. That is why I believe in homeownership, and I know it's the same for a lot of you and why you sell it to your clients. Plus the perks of real estate investing and passive income, but that's a conversation for another day. Specifically, October 17th, if you'd like to save the date and mark your calendars. Now, let's talk about it. If we've had it wrong this whole time, we should consider, what impact does government spending have on inflation? I'm over here trying to analyze consumer debt and consumer spending and consumer confidence. Maybe it's those assholes up on Capitol Hill that are screwing us over. There's a relationship between government spending and inflation for sure. That's part of what got us here. Remember those stimulus checks? The cash, when the government spends more money, it injects more cash into the economy. That cash competes for goods, which drives up the cost of said goods. We see this in housing, right? We've seen it. We've been first front row seats. But it happens even at McDonald's. Over the past 10 years, the prices at Mickey's have gone up 100%. Should we blame government spending for McFlation? Did you spend your stimulus check at Mickey's on Egg McMuffins? I'm not shaming you at all. I love those hash browns more than my husband. The coffee at McDonald's is also 100 times better than Starbucks. I mean, honestly, when I drive past those golden arches, my steering wheel just turns itself. At this point, you're beginning to understand the thumbnail even more. I have reached Delulu status for sure. Stick with me anyway. Government spending also results in higher borrowing costs because they have to finance their spending, right? Which leads to higher government debt with higher interest during inflationary periods, which leads to more inflation for everyone down the line. But on the other hand, if the government spending targets programs that boost productivity, think infrastructure or education, it increases our economic output, meaning more goods in the market, so the price of them has to come down. It's anti-inflationary then. That government spending is anti-inflationary. The most recent spending bill passed in December of 2023, it had $772.5 billion designated towards those type of programs that boost productivity. Let me just find a good note here to end on. Buying power, not specific to real estate, but in general, has improved. The average worker's earnings, real earnings, even after accounting for inflation, increased a whopping 0.6% year over year. So maybe that's it. Maybe that's how people are keeping up.